Well then, good afternoon. What a great year for Indian market, for world equity markets actually in general, and especially the last quarter was phenomenally good. What did you make of that, and what's your sense about FY18?
Last 3 months have been quite spectacular. I mean, I don't think anybody would have thought in the early part of January that we would have such a spectacular running coming on the back of the depression of November and December, particularly in India. So I think it would be fair to say that most people are surprised. I mean, hindsight is another thing, but I think most people I speak to are quite surprised by the ferocity of this rally. And it's not an India-specific rally, it's a global rally. And most markets are up between 15 and 20%, some even more in dollar terms. So it's been a completely global kind of rally. The way risk appetite has come back is spectacular. So I think momentum is still with the market going into the new financial year. And the people I speak to here out of Asia, the portfolio managers, I think one thing is quite clear, that the traditional long-only funds, the traditional country-specific funds, not just in India but elsewhere, are not getting bulk of the money. So this $5 billion in 4 or 5 weeks that we've seen in India, I would say that 80% of that would have been channelized through ETFs and index-like passive investment vehicles, and not active vehicles like long-only funds or even hedge funds or country-specific funds. That tells you that there is a bit of momentum chasing which is going on, and particularly in India. I mean, 4 weeks back, I think a lot of people were very hesitant among the global fraternity to put in money in India. But I think a couple of events have got out of the way, and people have been left out of the India rally, and therefore we've seen this $4 or $5 billion come in pretty quickly. But it's not come through most of the fund managers that I met on this trip.
Hi Udayan, we're already trading at above historic valuations, but still not at stratospheric valuations. So with the left out feeling, with the momentum coming in from ETF flows, as you pointed out, do you see the markets headed significantly higher?
Well, you know, but that may happen also because there is a lot of cry for correction that one hears continuously after the market has gone up. And while this time is a little different in that the domestic investors have participated, in fact, in many cases, I think domestic investors in this rally have participated more than foreign portfolio investors in the last few months of the rally. But having said that, I still hear a lot of cries of correction at every level. So that tells me that a lot of people are still not into the market, and we are not at, while in terms of valuation levels and absolute levels, we may be at higher levels and maybe even slightly ahead of fundamentals. But in terms of everybody being in the market and that kind of euphoria which comes with it, I don't think that kind of a market usually comes with so many calls of correction. So you're right in pointing out that this market could actually blow out on the way up, despite the fact that everybody keeps fretting about valuations and other concerns ahead of us, and that possibility certainly exists. But these are very difficult things to time. I don't think in January, if you asked people, they could have predicted a 20% move in 3 months. Right now, again, these predictions are all fraught with a great amount of danger, because we're sitting on the back of 3 months of momentum, and everybody's inclination is to extrapolate on the same trend forward. So I think the next couple of months could be interesting because we have earnings, the global trend. I mean, we've been on a back of a very powerful global trend, and some of the recent noises may be putting this global trend to a little bit of risk. So I wouldn't be surprised if in April and May there is some volatility in global and local markets, but it's difficult to say whether the markets will go up before it corrects. I was of the view when the market was at 8,900, 9,000, and I told you that I expect 8,600 to happen first before 9,300, and we're already at 9,200. So we could easily go beyond 9,300 now before going to 8,600. So this will be difficult to time, and there is the chance of the blowout that you're referring to. But I think it will be prudent to keep the possibility of some kind of volatility and a near-term correction in mind, because we have gone up 3-4 months on the trot continuously.
But then there's a big move that we have seen in the PSU banks. Do you think the market is giving a lot of credence to the policy move? Because, you know, in the past also we have heard about policy moves, but this time the market is giving a lot of credence.
I think everybody spoke about that. I think there is a lot of expectation that there will be some kind of a policy fix. Now, you know, so of course the PSU banks are running ahead of that kind of policy announcement. Now, what it will be is going to be very, very critical, because there could be one of maybe 4 or 5 kind of solutions which the government might come up with. And I think you cannot conclude ahead of that solution coming out that whatever the fix is actually going to be a permanent fix and put a line under the public sector banking NPL problem. So I think there is clear visibility of that rally happening ahead of such an announcement, but I hope it's a carefully calibrated one and not a temporary band-aid kind of a solution once again, because that will lead to immediate disappointment. And this is not just important for the public sector banking space, because if we can get a credible solution on the NPL cycle, I think that actually is as big an event which can lead to some kind of a even re-rating for the overall market, because the sigh of relief will be so immense because of this NPL problem being addressed in a credible way, that I think it's bigger than the public sector banking universe per se. So I'm keeping my fingers crossed, everybody is, that this time the announcement is a really well thought out one, because that I think can even end up justifying a fair amount of the valuation premium that we have begun to enjoy of late.
Okay, and finally, do you think, Udayan, the markets are in a Goldilocks scenario with so much foreign and domestic money chasing stocks?
Well, you know, I'm very leery of talking about Goldilocks scenarios, because these usually come on the back of strong market movements, and then we begin to think that all the risks have vanished and only good triggers exist for the market. So in the past, every time I've thought this way, the market's given me one tight slap in the face and something has happened to go wrong. So I won't stick my neck out and say that now we've entered a virtuous cycle and nothing can go wrong. But you're right, of course, one of the biggest triggers for the Indian market clearly has been the stability of the domestic investment flows, particularly in bad times for the market, which clearly is a departure from earlier trends. I hope that continues, but I was talking to one of the fund managers out here, and I got an interesting spin on it. It is, of course, a truism that more domestic money flowing into the market is good for the overall technical health of the market, but I think it may also be creating interesting opportunities for many of these financial sector plays, and I'm not talking about private banks here. So many of these, portfolio wealth managers, asset management companies, even insurance companies will be massive beneficiaries of this shift towards financial savings. I think a part of that might have been priced into some of these stocks, but the next big NBFC rally might actually belong here and not to the microfinance or the some of the lending type of NBFCs that we've seen in the past. I think the financial space is opening up for massive opportunities going forward as this financial savings and shift in financial savings story plays out in India. So there is an overall huge technical opportunity for the market overall, but there is a sector-specific opportunity underlying it as well.
Okay, Udayan, thanks a lot for your time today. That's Udayan Mukherjee, of course. We'll